Imagine borrowing costs falling, but not falling so much that prices surge. What if today marks a turning point in the housing market, the labor market, and possibly your mortgage payments? This is the possible interest rate drop of September 17th, 2025. Will the Federal Reserve drop interest rates on September 17th, 2025? The Federal Reserve will be meeting, and economists say dropping interest rates by a quarter point, 25 basis points, following a period of steady rates in the 4.25%, 4.50% range since December, will be top on the agenda. The move was largely expected by markets, but what's important is why the Fed decided now, and what this may mean for consumers, for home buyers, and for the economy at large. Several converging forces pushed the Fed to ease. Cooling labor market. Job growth has slowed significantly. August job gains came in far lower than expectations. Unemployment ticked up to around 4.3%. Inflation trends. While inflation remains above target, recent data show a slight easing. Core inflation and inflation expectations are less severe, giving the Fed more wiggle room. Pressure from bond markets and yields. Yields on longer-term treasuries have dropped, especially the 10-year yield, easing pressure on mortgage rates. Global and domestic risk. The IMF and other bodies have flagged downside risks. Labor market weakening, reduced job vacancy rates, consumer confidence falling, plus external risks like commodity prices and tariff pressures. For the broader economy, reduced borrowing costs for businesses and consumers could reinvigorate spending, investment, and perhaps stave off a sharper slowdown. However, there is a danger. If rates fall too fast, inflation may reaccelerate, undermining recent gains. Also, weaker employment data suggests there's already strain in the labor market. A careful balance is required. For the housing market, mortgage rates have already dropped. 30-year fixed mortgages are now around 6.35%, the lowest in nearly a year. This could spur more buyers into the market, especially those sidelined by the earlier high rates. Refinancing activity is likely to rise, as homeowners with older high-rate mortgages seek relief. But home prices remain high, housing supply limited, and long-term yields are still influencing mortgage costs, meaning full affordability relief likely won't happen overnight. Based on current forecasts, here is what analysts expect. Rate cuts are likely at the remaining Fed meetings in 2025, possibly another quarter point or two. Some institutions, for example Morgan Stanley, now forecast 3 or even 4 cuts this year. But there's a caveat. Each additional cut is becoming more data dependent. If inflation fails to continue cooling, or employment deteriorates sharply, the Fed might pause. Mortgage rates, however, may not fall as quickly or as much as the Fed funds rate. That's because long-term rates, notably the 10-year Treasury yield, are heavily influenced by investor sentiment, inflation expectations, and global capital flows. So even if the Fed cuts, mortgage rates might hover above 6% for some time. If you're looking to buy, now may be a good time to lock in a mortgage, or at least begin shopping. Rate declines are giving some breathing room. If you own already, refinancing may make sense, depending on your current rate versus what you can now get, and the costs of refinancing. For investors, watch inflation data, job market reports, and Treasury yields. These will drive how much more rates might fall, or whether they bounce back. If the interest rate drop on September 17, 2025, this wouldn't be just a headline. It will be a signal. A signal that tension between inflation and economic cooling has tipped slightly in favor of relief. But the relief is measured, cautious, and imperfect. If you want to find out how much your home is worth in today's changing housing market, check the link in the description now. You might be surprised. Thank you for watching. Do like, share, and follow for more updates on how economic shifts like this affect your wallet and your home.
Your ultimate hub for real estate insights, breaking news, entrepreneurial wisdom, investing strategies, and self-development hacks. If you're ready to expand your mind and stay ahead of the game floor, you're in the right place. Subscribe now. Your future self will thank you.